Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Glad you're here. Welcome to Modern Investing Techniques, episode 90 for June 28th, 2026. I'm Patrick, coming to you from Vancouver. Today's markets have some interesting setups. Let's break them down. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The week's biggest developments pulled together, what actually moved, why it matters, and what to watch next. The Nasdaq Composite fell from 26,518 to 25,298 over the week. The S&P 500 moved from 7,501 down to 7,354. The TSX Composite held near flat, ending around 34,980. Our simulated portfolio sits at plus 1.04% year to date, against the Nasdaq's plus 14.13% year to date. That leaves us with negative 13.09% alpha for the year. Sector rotation into healthcare and financials stood out while tech and energy lagged. This is the exact scenario where our earlier rule about volume confirmation would have helped separate real moves from noise. M&A driven sector rotation lets investors capture premium valuations when large pharma or tech firms acquire next generation platforms. The AbbVie $10.9 billion Apogee deal shows how acquirers pay up for late stage immunology assets that extend patent protected revenue, screen for targets with phase 2 or later data, and low float. Set alerts on volume above the 20-day average once the announcement hits. The pattern has worked best in 2021 to 2023 biotech rallies when acquirer cash balances exceeded $5 billion. Risk is regulatory delay or integration failure that erodes the initial pop. Use your broker's M&A calendar filter plus a simple relative strength scan versus the XBI ETF to time entries. Dividend growth investing focuses on companies that consistently raise payouts over time rather than chasing the highest current yield. Screening TSX listed dividend aristocrats on platforms like Wealthsimple or Questrade using 5-year dividend growth rates above 5% and payout ratios under 60% suits TFSA compounding. Covered call ETF strategies such as ZWC or QYLD add 4 to 8% annualized yield in sideways regimes. Position sizing matters and limit covered call exposure to avoid capping upside during strong rallies. AI momentum investing uses real-time sentiment and earnings revision data to ride sector leadership. Micron's surge on AI demand shows how individual investors can apply this by screening for companies with both positive earnings revisions and volume spikes above the 20-day average. Size positions at 3 to 5% of a TFSA to limit drawdowns. Canadian investors can implement it by pairing a US-listed AI name with a CAD-hedged ETF wrapper to manage currency exposure. Intense rotational plays involve shifting capital between sectors or themes based on short-term catalysts. Screen for stocks with fresh 12-month target increases from multiple brokers, and check 5-day relative volume above 150% of the 20-day average. Rotations have delivered the strongest alpha in the final 6 to 8 weeks of a quarter when macro data shifts. Since we last covered these themes, the ongoing story of sector rotation has been the dominant driver. The AbbVie deal and Micron commentary both reinforced how catalysts in healthcare and AI can create short-term opportunities even as broader tech sold off. Geopolitical crosscurrents added volatility, with fresh US-Iran tensions and Trump threats weighing on rate cut odds. The Bank of Canada decision sits 2 weeks out, with markets pricing a hold. Oil prices erase prior gains as more tankers transit the Strait of Hormuz. On the international side, Japan government reportedly calls for appropriate monetary policy in a draft plan, while the Bank of Japan's summary showed some members pushing for faster rate hikes. Europe faces 1,000 excess deaths from the heat wave sweeping across the continent, which may weigh on economic data. Wolf Research stays bullish on equities and sees AI and semiconductors driving second-half gains. Deutsche Bank names top healthcare stocks, led by Dexcom and Insulet. Earnings from Nike and Constellation brands sit on the calendar for next week. Crypto markets remain 24/7, but no major moves appeared in the data this week, so focus stays on equity catalysts. Key lessons from the week include requiring at least 2 confirming signals before entering rotational trades, and remembering that single catalyst entries can still lag when sector rotation accelerates elsewhere. Prepare for Monday by watching volume spikes on any fresh M&A announcements and checking earnings revision screens for names with upward moves in the last 30 days. Longer horizon themes worth watching include defense spending globally and the continued divergence between AI leaders and the broader market. Last week's simulated hold on KO closed flat after we entered on pricing power against rising producer prices. The thesis protected capital in a defensive name but delivered no outperformance in flat markets. Earlier in the week, LLY closed plus 0.17% on next-generation obesity data, yet reminded us that even strong catalysts need volume follow-through. What this teaches us is that defensive names can shield portfolios, but rarely deliver excess returns when rotation favors growth sectors. Wealthsimple and Questrade both offer free earnings revision screeners and volume filters that make these setups accessible in under 30 minutes. Interactive Brokers adds options chains for covered call execution directly inside registered accounts. Set alerts on relative strength versus sector ETFs like XBI to catch M&A-driven pops early. The week ahead brings Nike and Constellation brands earnings, plus fresh analyst notes on healthcare names. Japan monetary policy developments and Europe heatwave impacts also remain on radar. Our simulated portfolio cumulative return stands at plus 1.04% year to date. Win rate across trades sits near the mid-range, with average return per trade reflecting the negative alpha versus the NASDAQ benchmark. The AI analysis is learning from volume confirmation patterns and adjusting position sizing rules accordingly. Now, here is something most retail investors get wrong, and it cost me money before I figured it out. Imagine you own shares in a name that just printed a strong earnings beat, yet the stock barely moves because sector rotation is pulling money elsewhere. The mechanism is simple. Relative strength versus the benchmark tells you whether the catalyst is truly driving inflows or just noise. The pro tip is always pair any earnings revision screen with a 10-day relative strength check against the sector ETF before sizing up. That separates informed entries from chasing headlines that fail to deliver. Before we wrap, keep an eye on any volume confirmation around the upcoming Nike print and the healthcare names highlighted by Deutsche Bank. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow, and if you'd rather watch than listen, find us on YouTube at Nara Network, links in the show notes. And before you go, this show is part of the Nara Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Fascinating Frontiers, the most fascinating news from space and science. Find every show free at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?